We're seeing some pressure on NVIDIA, right? Obviously, a lot of retail investors, a lot of institutional investors hold this company.
Yeah.
Did you expect these U.S. trying to trade talks to actually have a market impact? Because I talked to a lot of traders. They said, no, not really. It's kind of a non-event.
Yeah, that'd be something I think gets shrugged off right away. But we'll see as it develops whether or not it does get shrugged off, or we head back to those all-time highs, or this is material.
All right. We're waiting for the Fed decision this week. Everybody's pretty much expecting a cut, either 25 basis points, slim chance a 50 basis point cut. Your word of the day is proactive. Who needs to be proactive? Do you need to be proactive about your portfolio ahead of the cut?
I think you need to be proactive more in a broader sense here. In the really good times where we see all-time highs almost across the board, these are the moments that we want to prepare for more volatility or down markets. And I just don't want retail investors or investors in general to forget to look at their fundamentals and make sure that they can withstand any volatility that comes their way, because that's where the opportunities are. It's not just about protecting your neck.
All right. Your pick is direct indexing. What? Index funds? That's the pick today?
No, a little bit nuanced to that. So we're seeing more of the evolution of passive investing through direct indexing.
I'm teasing you about
Yeah, I know. We're going to get basically better tax advantages when we think about our taxable accounts. So the evolution of passive investing now in direct indexing, where we can have customized strategies and we can do daily tax loss harvesting. So number one question I get asked by clients: how do I save more money on taxes? Here is the ability to do it. We're going to see a lot more of this over the next few years.
All right. So I often hear people talk about, I think what you're talking about, they call it factor ETFs, where you can kind of pick ETFs that have certain screens, whether there's tax benefits, whether it is momentum or dividend strategies and things like that, and also some mix of active and passive management. When you're talking about direct indexing, are you talking about just passive ETFs or a combination of some active strategies as well?
We're talking about tracking a particular index like the S&P 500 and being able to now customize which components of that index you want, simultaneously being able to look at what losses exist on a daily basis and being able to harvest those losses for future gains or for whatever purposes you have from a tax planning perspective.